Today I'm going to talk about how to make money with Warren Buffett's buy and hold advice. First, I'm going to talk about the facts on the buy and hold advice. And then most importantly, I'm going to talk about how to use Warren Buffett's buy and hold advice so you can avoid making this one huge mistake when using a buy and hold strategy. If this is your first time at our channel or you haven't subscribed, be sure to click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner with Sickle Hunter Financial Advisors. First, let's take a look at some of the facts on the buy and hold strategy so you can understand that you can apply this to both a diversified portfolio and individual stocks. First, let's take a look at the Dow Jones Industrial Average. So this chart right here shows us what you would have done if you invested $10,000 in the Dow Jones Industrial Average. We'll call it the Dow. So if we took $10,000, this $10,000 and invested it in the Dow from 12/31/2001 to 12/31/2016 and stayed fully vested, we would have ended up with $28,698. What's amazing about this is if we had missed just the 10 best days, we would have actually only made $14,679, which is a $14,001 difference. That's a huge difference, nearly double. And you can see here that if we missed the top 20 days, the 30 days, and the 40 days, that our returns would just suffer tremendously. If you had missed 20 or more of the best days, you'd have actually lost money. So first we talked about missing the best days. Now let's look at the reasons why that might occur. On this chart, we can see that some of the best days, in the market occurred after some pretty terrible headlines. This chart shows us that a lot of the best days in the stock market occurred after some pretty terrible events and news. So you can see here, the first one is these gains occurred within a year of the September 11th, 2001 attacks. 7 of the Dow's 10 best days since 2000 occurred within a year of the financial crisis triggered by the Lehman Brothers collapse. Now this chart only goes up to 2016, but 7 of those 10 days, those best days, occurred within a very short period of time. And the third one is the Dow also rallied after the volatility in the week following Standard & Poor's, the S&P, downgrade of the US credit rating. So that's some pretty negative news, and then you can see that a rally came shortly after. And of course, the third and most impressive fact is Warren Buffett's buy and hold advice applied to his 20+% compound rate of return. His ridiculous rate of return that is incredible. So you have these 3 facts that are very compelling to use the buy and hold advice. But why do we hear that buy and hold sometimes doesn't work or doesn't work in this market or that market? And that comes down to using the buy and hold advice incorrectly. So to think that something has changed where the way that you should invest should also change is a mistake when you're looking at the buy and hold advice. Another one that's misapplied very often is looking at individual stocks. So very often when somebody is failing with the buy and hold strategy, it's because they're missing the understanding that price is what you pay and value is what you get. If you just go out and buy a security but don't understand what the value is, no matter how long you hold it, it might not meet your expectations, and then you might think that the buy and hold strategy doesn't work. The reason Warren Buffett's buy and hold advice works so well for him is because he also understands what the value of the business he's buying is or should be. So he knows what the price is today, and he can say, okay, this is what I think the business is worth. Where investors often get misguided is applying the buy and hold strategy to a company that they really don't know what the valuation is or what it's worth. They're just hoping that over time it increases. It's also important to make sure that you're not just applying the buy and hold strategy sometimes or giving a bias towards buy and hold strategy to convince yourself or rationalize why you're holding a particular stock. Using Warren Buffett's buy and hold advice is not just going out and buying a particular stock because you see a headline or you saw that there's some new technology that's coming out. What really makes Warren Buffett's buy and hold advice work is if you think of the analogy of an athlete. So So if you think of an athlete, there's thousands of minutes of training that go into each minute of competition. So if you're looking at this from an investment standpoint, it's spending the time to do your work and do the research and really understand the companies that you're buying before you go and make those trades. And then when you do go buy those companies, it's making sure that you're going back to the facts and the valuations. And even when you do own the security and you're uncertain if things have changed, go back and do more work and more research on the individual position. And if the facts change, that's when you can reevaluate the decisions that you need to make moving forward. As it applies to a diversified portfolio, it's going to act much differently than an individual stock. So therefore, that's why the buy and hold strategy works so well when you're looking at a diversified portfolio. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.